come to order. Thank you for our 8 witnesses today. Senator Scott, thank you for your work on this. The 8 bank CEOs appearing before us today lead the biggest global systemically important banks in the United States of America. Your banks hold nearly $15 trillion in assets, manage trillions of dollars of investments and retirement accounts, fund the biggest companies in our country. You hold nearly half the nation's deposits, more than $80 trillion in client assets. Your banks touch almost every aspect of our financial system in working Americans' money, even if they are not your customers. All of that makes you 8 of the most powerful people in the country. The banks you run are so large, so complex, so interconnected that their distress or failure could pose a threat to the entire global financial system. You may be private companies, but the risks you take and the mistakes you make don't just affect you. They don't even just affect your customers, not even just your shareholders, not even just your workers. Mistakes you make affect the whole economy, and as we all remember from 2008 and 2009, they can certainly affect American taxpayers. That amount of enormous power should also come with enormous responsibility. A big part of that responsibility is to make sure that investors, not taxpayers, are on the hook when risks at your bank don't pay off. That's why we need strong capital requirements at the biggest banks. Because of this committee, we finally have financial watchdogs in place who are now serious about the need for these protections. Common sense rules to ensure that banks can withstand losses from the riskiest financial shenanigans that create no value to the real economy. These rules protect against risky trading and derivative activities on Wall Street, the same activities that led to the 2008 financial crisis. They would close a loophole that allowed banks like SVB to hide behind an accounting fiction that lowered capital requirements and contributed to its failure. And anyone who had any doubt about whether Wall Street could be trusted to use its power responsibly need only look at the current lobbying fight on this. If you've watched the local news in Washington, if you've waited at a bus stop in Washington, if you've flown out of Washington National Airport, you've probably seen ads urging people to stop Basel Endgame. The 8 of you surely know your audience. And you haven't stopped there. You've even gone national in that campaign, pouring money into ads for Sunday Night Football. It's a campaign waged by your lobbyists to prevent financial watchdogs from putting in place these stronger capital requirements to protect our banking system and our economy. Listening to these ads, you hear all kinds of claims about how stronger rules will raise the cost of mortgages and stop small business from making loans. Wall Street banks are actually saying that cracking down on them will, quote, hurt working families. Really? You're going to say that cracking down on Wall Street is going to hurt working families? You're really going to claim that? The economic devastation of 2008 is what hurt working families. The uncertainty and the turmoil from the failure of Silicon Valley Bank hurt working families. When small businesses with their employees in Ohio, in Utah, in Minnesota, and California, and Rhode Island, and Montana, and South Carolina, across the country didn't know if they could get access to their money and make payroll. And of course, the claims in this ad campaign simply are not true. Your game, too often, is to try to confuse people. Most Americans think of a bank's capital, if you force people to think about it at all, most Americans think of a bank's capital as money stashed away in a vault somewhere. But that's not what it means. You all know that. Capital is just a way to fund loans and investments and risky activities in a way that can absorb losses if things go south. It means shareholders and investors are on the hook, not taxpayers. And what those glossy ads don't tell you is that your banks have been reducing your lending to small businesses and veterans and home buyers for years now, long before the new capital requirements were proposed. Remember that. These are proposals at this point. They haven't even been implemented. Be clear, absolutely nothing in these rules would stop your banks from making loans to working families, to veterans, to homeowners, to small businesses. Absolutely nothing. The reason banks might make fewer of these good loans in the future is the same reason we've been seeing less and less productive banking activity for years. It doesn't make your banks as much money as the risky stuff. You know that. We all know that. You'd rather fund risky trading and derivatives bets than boring bread and butter small business lending. So even with this rule, you can still lend to small businesses and homeowners. You just might not increase your profits quarter over quarter by quite as much as you increased them last year. But I think most Americans would agree that that's a fair trade-off for society. More small business lending, more first-time home buyers, less chance of taxpayer bank bailouts. In exchange, maybe smaller executive bonuses and a teeny tiny bit less profit for multi-trillion-dollar Wall Street banks. We know the banking industry doesn't give up without a well-funded fight. Wall Street pours money into high-priced lobbyists to fight any effort to put the most basic guard rules on your ability to do whatever you want. What your banks want is to maximize quarterly profits. We understand that. The cost of everything and everyone else be damned. We've seen over and over what a problem that is and the harm that the current system does in places like Ohio. Earlier this year, when I first heard about SVB's collapse, my mind immediately went to another crisis in my state in East Palestine, Ohio, the place where the train derailment happened and affected dramatically a community in my state. They have one thing in common. Corporate lobbyists for years pushed for weaker rules, less oversight. Companies cut costs. They don't care about safety if it gets in the way of increasing profits. Working people always working people pay the price. That's why people hate Wall Street. That's why people hate Washington, because these lobbying campaigns that you've engaged in usually work. We see it over and over. We saw it during the fight to pass Dodd-Frank after the financial crisis. Many of us remember the quote from an industry lobbyist after the president signed Dodd-Frank. Now it's halftime. This time Wall Street was true to its word. The executives whose banks failed this spring had lobbied for watered-down rules to make it easier to chase profits at all costs. They knew risks were building at their banks, but they chose to ignore those risks because it meant a bigger payout for executives at the top. So we should be concerned when the executives of even bigger banks are doing the same thing against capital requirements. Working Americans are tired of arrogant executives gambling with other people's money, then riding off in the sunset without any consequences. That's why we need to pass the Bipartisan Recoup Act. Thank you, Senator Scott, for your work on that, to hold failed bank executives accountable for driving their banks into the ground. It's why we need strong capital rules. Before your protest, I know, of course, that it wasn't your banks, the 8 of you, that failed. But after those failures earlier this year, we were reminded about how fragile our banking system could be. And as a result, your banks only got even more powerful. So it's fair to take stock of how you're using that power. I appreciate the long overdue increases in wages and benefits for many of your frontline employees. Thank you for that. At least one of your banks has made real efforts to get rid of overdraft fees. Thank you for that. But your banks need to do far better when it comes to meeting customers where they are and recognizing their dignity of work, your employees and your customers. You should be cutting prices for consumers, increasing opportunities for your employees, increasing diversity with your executive ranks, supporting your workers' efforts, if they so choose, to unionize. And you should stop pouring money into lobbying against efforts to protect taxpayers who in the end subsidize your entire industry. The reason for this hearing every year is to hold the biggest banks accountable to the American public. I thanked each of you for being here a moment ago. Personally, I appreciate you're all coming together for this hearing. We want to hear from you. What will you do to support workers, to invest in the real economy, to finally put Wall Street to work for Main Street?